Crazy week, yeah. But then I'm happy that some of you we got two trades, right? On the what is it called? On the during our conversation on Monday, we got two trades. Both of them did 2 hour before reversing, and one is still in profit, and then the other one is still misbehaving. It's already had already hit SL, not misbehaving actually. So good evening and welcome to today's chat. If you're here, kindly tell us your name and where you're joining us from. Kindly tell us your name and where you're joining us from. Like I promised, my sessions will be ending with um some of the basic things you don't know in trading. Yeah, that's how I'll be ending my sessions. So if you follow through till the end, you get that. If you follow through to the end, you get that. So good evening again, and welcome to tonight's session where I discuss what we talked about on Monday. That's the reason why I said it's very much better when you join us from Monday, so that everything I'm saying today will not be entering one ear and leaving through the other. So I'm sharing my screen now. If you can see my screen, let me know. If you can see my screen, let me know. Okay, let me just add myself so I can have two screens here. If you can see my screen, let me know. Okay, I believe you can. Nobody is talking. But then I can see my screen, so that means you can. So let's start from the top. On Monday, on Monday, we had only 5 pairs on our watch list now because I saw something this evening from a very good friend, Zilla. He said something making $100 to 1,000 every day is sweet, but it's not realistic. That what he's going for now is making $1,000 every month or every week in the next 10 years. Let me say it again so that it should sink. Making $100 to $1,000 every day is not what you should be looking for as a trader. What you should be after is making $1,000 weekly or monthly for the next 10 years, for the next 50 years, for the next 20 years, for the next 30 years. So this dopamine we are chasing, this dopamine we are chasing like crazy. We are dead in it. We've immersed ourselves in it, thinking that if you do it every day, that is when you're a trader. If you realize now, the people that make the most money in trading no longer trade every day. The Habbies, the Jeffries, the Kenners, the Kevins, the Ohajis, the Dags, most of these people don't trade every day anymore. Is it that they don't have money? They do. Is it that they don't have money to risk every day? They do. But they've known that trading is a game that most especially is psychological before you start thinking of what is in your head. So trading, you miss some, and that is why most of them don't even do sales paid services anymore. They don't, okay, some of them do sell signals, but most of them don't even sell signals anymore. Because I'm selling signal, yeah. Because why do I trade every day? Because people that pay me every month are not doing it for me to tell them that I can drop a trade once in a week. So which means they'll pay me $100 to come and make $20 or $50 or $100 or $1,000 because I'm dropping a trade once in a week. And that once in a week, you're not guaranteed that it's going to hit TP. So if I'm making for them 2%, 3%, and the person that paid me $50, $100 does not have $1,000 account, so the person is losing money. So if me now that are selling signals cannot give them at least 5% every week, that can make it 20% in a month, they are losing money. That's why most of people that pay for signal services, they don't come back. They don't come back. I have subscribers that pay me annually. I have some that pay me monthly. But my job is now for me to go beyond my means to make sure that these people's money, they got their money's worth. So trading, the flex is not making $1,000 every day. The flex is you making that money every week for the next 10, 20 years. So most people trade for 3 years just to learn what they could do. Like what you can do in 3 weeks, you use 3 years to learn it because it's psychological. It is not. I'll say it again. Trading is not technical at all. It's psychological. So if you're thinking that I'm going to make all this money in 1 week, in 1 day, hey, you make the money, but you first of all fix your head before you fix your finances. You first off fix your head before you start fixing your finances. I'm saying it every time. I'm saying it every time. So the reason why I'm training you guys, last week there's no trade. This week is just 2 trade. That is how trading should be. But if anybody pays me, I'll go out of my way to make sure that they make money. That is me just having some extra streams from my end. It's not that deep. It's not bad having extra streams. It just depends how you manage it. And then some don't really give a flying F about whether people make money from their signal channels or not. And that's why they keep pushing it to your face every day, every day. Enter this place, enter that place, enter that place. And then one day that dopamine will catch you, you enter, and then you see for yourself. So always trade for longevity. Leave that dopamine. It's not going to last. Highest is going to stay with you for 1 year, 2 years, 3 years. In the long run, it's not going to last. The best people lose money. Falcon lost $50,000 this week. He's looking for 1 million. He's the one that has been selling, flipping. Just today alone, he said it, that flipping is not realistic. So how long did it take him to know that it's not realistic? Has he not made money from flipping? He has. But one bad loss can clear everything you've made. So I don't know why I'm starting like this, but then anyway, the spirit carry me go, I go there. I'm saying it because these are the mistakes I've made. These are the mistakes I've made. I have students that have lost 50,000 of their own money. I have student that is in debt of 300 million of someone else's money. I have student that is in debt of 100 million, $100,000 of someone else's money because they believe that they can flip. They just believe that it's just one. I can take all these losses. Just one that worked. I've covered everything. It makes sense in your head till it doesn't. It makes sense in your head till it doesn't. So please, guys, don't give in. Do not give in. Trade conservatively. That way you can be in the game for a very long time. Only thing I like about Jeffrey Benson and Habi, they've been in this space for 9 years. You're doing something for 9 years. You, the universe, will favor you for being consistent, even if you're not having the skill. Just for being consistent alone, the universe will favor you. So you don't need more trades to make more money. You need fewer higher probability trades to make money. That's basically it. That's basically it. So, do you think I cannot come and look at this my watch list? I can add more. I can. It is not easy. It's not hard. It's just pressing plus, 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 plus. I can add. You can add as well. You can add as well. But the question you ask yourself is, to what end? To what end? That's what you ask yourself. I'm adding all these things. To what end? How much is it making me monthly? How much is it making for me quarterly? How much is it making for me annually? If you've asked yourself this question, know that if I add 100 pairs, that makes $100,000. Go ahead. But I guarantee you, I've been in this game long enough, at least 4 years, to tell you that Forex alone, crypto has been there for almost a decade. But for this particular Forex journey, bro, sis is not going to be consistent. So that's it. Let's get back to it. On Sunday, I'll be on Monday morning. I told you guys that this guy, I'm trying to sell it. I'm trying to sell it from this guy, from this place. But I said something. If you look at my whatever, my kidney, you see this thing here. Boom. Did he break it? No. Simple. No sell. It is that simple. This guy was here on Monday, and I said, if this guy breaks this place and comes back, then we sell. Did he break it and come back? No, he didn't. Why will I go and force a sell? Are you seeing it? It's that simple. It is that simple. Why will I go and force a sell? It's not going to work because what I said did not happen. So I can't do it. And even if you now start saying now, okay, he came here, he did not break this one. Did he break this one? No, he didn't. So why forcing it? Wait. Bro, wait. Sis, wait. So that is why we do not see any trade on USD card this week. From next week, I'll see know what I'm going to look for. But for now, no trade. No trade. No trade. So just follow trade ideas. And it's simple. It's simple. When we saw this one, we made money. So why can't we make money from here? Just wait for it. The problem is dopamine. You just want your MT5 to be working. Yeah. You want your MT5 to be working. But my sister, my brother is not realistic. He's not consistent. So don't do it. Don't do it. And when you don't see trade ideas, don't go looking for signals from somewhere because you will find and you blow your account. Then your body will come down. So the second one is GBP USD. What did I say last week? The same thing. The same thing. said on this guy. I said this guy is going to break this top and buy. The same thing. We're going to break this top and can buy. And of course, you chop SL. You chop SL. That is, if you're just waiting for this break to happen and then you buy directly without anything, you chop SL. Because even though he gave you small profit to this point, he returned back. So I don't know your entry model, but if I want to take this trade from here, let me remove this guy. And then this guy already broke this structure. Where is your liquidity? None. None. Like none. Liquidity is something that should be like this. Like this. Comes, breaks structures, gives you liquidity, either coming back like this and then goes back and then come back and then you buy. So now this one is this break of structure. Where's your liquidity? You just broke structure and came down directly and took out your low, your base low. So what are you looking for? You're looking for a new break of structure, meaning price to take out this up, break this structure here. So trading is, I don't know how I explain them, but it's not that hard. So you can't even take this trade even after breaking the structure because there's no liquidity. So for price to come back to this down this low here, it means here is the liquidity. So where will your entry now be? Nowhere. That's why price came back, rallied up, came back, rallied up, and then boom, took it out. So I don't know if I made sense to you, but then this is just it. It is a playbook you follow. It's a playbook you should follow. Where is the trade we've taken last time on this guy? You took, okay, I've removed it. We took a buy from this guy. So for example, now you see a break of structure here. Break of structure. Boom. 5 break structure here. This is liquidity. This is entry. That being said, this one did not break structure because this is not a good break of structure. This is not a break from here now. This is a break of structure here, here. So all these things here can be your liquidity. Everything here can be your liquidity. You can buy from this breaker block here. Boom. TP here. You're gone. Same thing happens. This is now your break of structure. Where's your liquidity? It's very far. All these things here. Where's your POI? Either from this breaker or from this guy here. So the same storyline matters. Break of structure, liquidity, POI. Break of structure, liquidity, POI. So this one you're looking at now, there's no break of structure, there's no liquidity, there's no idea, but it is not complete. It doesn't mean you should not go and start forcing it. You're forcing it with your capital. Are you seeing it? So this break of structure, boom, this liquidity. So it's not reacting, price is reacting from this breaker or this one here. From the higher time frame, actually. So follow it the way it should be followed and not be emotional about it. You can't be emotional about it because it's your money. You can't be. So now the price is reacting from this guy. What you do that go to lower time frame, and like I said this same before, this one will be from Monday chopping. From here now, price gave this high and fell, open it better. Something like this. From here, gave this high, boom, took it out. A sweep has happened and then took up this high. And now it's somewhere here. So from Monday, you're looking for price to come back to this region and then you continue chopping. Simple. But looking for what's not looking for you is the reason why you keep looking, you keep losing money. You're looking for what's not looking for you. That's why you keep looking, you keep losing money. So I believe this Monday, I don't know how this guy is going to close, so I can't say it right now. So that is why we don't have any trade on GU this week. Just following price. This is where it started from. This break of structure is just a fake out. Just want to make you to feel comfortable. But I don't like using those words because nothing like fake out. Break of structure. There's no liquidity. You took out this one. So how do you think this one is going to hold again? On which basis is he holding? None. So just follow the book, follow the playbook, and you make money. It's not random. It's not random. Simple. It's not. It's not. Just follow your bias and then go start riding with it. So the number 3 is GBP NZD. If you recall this trade, last week we had nothing on it. I think last week was a loss or so. I'll stop clearing all these things. I'll start leaving them. Okay, last week no trade at all. So this week we saw this and I called it somewhere here. And I said, when price come to this place, you can start taking partials or break even, whatever, anything you want to do. But from 1 hour time frame, you notice that when I call swing trades, I extend my stop loss. When I call swing, I'm saying this now again. If you're here, you're taking my trades and my trade calls and everything. This is how you can maximize my trade calls. When I give you a swing trades, I'm covering a invalidation point. But you're taking those trades as a day trade. You're taking them as day trades, so not as a swing trade. So how do you manage them? You manage them as a day trade. So I call the trade from this point on Monday. What are you looking for as a day trader? You're looking for confirmations. Confirmations. And your confirmation should be something like this. This is what happened from here, price go here, and then went down. Coming back to this place now, it tapped here and went down. Tapped here again and went down. Tapped here and took off. So once this price took off from this place, boom, your entry now is back to this other block. And then your SL is now, let me remove this thing here. Your entry is now here, this other block here. And your SL is now lightly above here. Because you are a day trader. You are a day trader. So that means one thing, that your entry is still here, your SL is somewhere here. Which means what? This trade, you have made a valid 1:3, 1:4. Simple. From that point to this point, 1:3. And you can do it just once and you're done. But once you keep using that external that I marked out, those are for swing traders. And swing traders, 1:2, they are okay. Because they are risking big money, 5,000, 10,000 and above. So once it's like that, you start doing it just that way. But to a day trader, you can't hold the trade from Monday to Friday and pay for swap fee and pay all those nonsense and still make less than $20. So it's nonsense. Scale down to smaller time frame and get your daily entries. On Monday, you get this. On Tuesday, you got this. On Wednesday, you got this. It's already 9 hours. But it is not right to keep taking entries in the same direction because it should now look like you are in a range. So it is not right. It's not right. Just take your entries, take your profits, and you're off of that pair. Because this one now, it doesn't happen. Like it doesn't happen. How will you say it happens every time? That price will come back and keep retesting one particular level. It doesn't happen. It doesn't happen. So make sure you keep it like that. It doesn't happen. Do you understand? So next time, don't just go and be saying once price come back to my other block, I'll take it. Once it come back, I'll take it. Once it come back, I'll take it. You're just gambling away your money. Do you understand? You're gambling away your money. Just one is what it takes. Do you understand? Just one. Just one. You're taking that one, you're good to go. Yes, sometimes you can even take two, but three is unrealistic. Meaning I've gotten 3% here already. I can risk 1% here and I'm still have 2.4. But three times it doesn't work over time. So stick to what works. There's no break of structure to the down. The reason why this one is even realistic is because there's a break of structure to the downside here. There's a break of structure here. So when price come back to this place again, you can still determine to sell. But this one, this is not a break of structure. So you're not sure that price will come back here and still dump from here. You're not certain of that. But the second one, you are because it follows structure. So I don't think you're understanding me. So when I call a trade that is a swing, your job is to go to lower time frame below and look for entries and maximize your wins. So I believe I I made sense explaining that. So for let me just go like this. For GBP NZD, we made uh we made money. We made money. One is to one ish. One is to 1.5%. Yeah, we made money. Pe- People that do 1 is to 1, that's money. That's money. That's money. So next week, I'm still hoping that this guy will drop to this place. Like, he's not, he's not that. I believe that it will dump to this point. So that's for next week. So the next one is USDJPY. The next one is USDJPY. So, like I said, the same thing I said over and over again. USDJPY is a pair that it doesn't really respect break and retest. Those people are making money from this guy. Because you can see as this guy broke, jumped immediately. He's not giving you break of structure, liquidity, and all that. It does, but in rare cases. And most times it follows breakers. Most times it uses breaker blocks like this, this is another one. This, like most time it follows breakers. And if you're going down, you're supposed to follow that breaker again. Like this is the first breaker block and here. So and then when I said that price will come back to this point and then drop. But I didn't just say, I keep saying it, I didn't just do this thing. The difference between, for example, this, I'm saying it again, the difference between this here and then this. These two things are different. It means once price come here, start looking for sales. But I've already given you confirmation of the sale you're looking for. So price will come here, tap here, drop, breaking the structure that I have created. Once it drops and then comes back, this is when you can sell. But this one means once price come here, start selling, start selling, start selling. But that's not the way it should work. So whenever I say something like do something like this, understand the pictorial illustrations first before you jump on your chart and lose money. I believe you understand that. So what I marked out was from 1 hour time frame. So price was here that day, and I'm like, this guy is going to get to this point, and if he breaks this low, then you can keep selling. So from here to here, boom, sell. So that's it. But then it didn't happen. And if you keep following it and be forcing it and be forcing it, you keep losing money. Because one of these, once one breaks, they'll keep they'll keep going down. They'll keep going down. But no structure and follow it to the latter. No structure and follow it to the latter. So if it didn't happen, if you know day, you know day. So don't just force it. If you know day, don't force it. Just keep it the way it is. So that even if you don't make too much money, so you won't lose more. I believe you guys understand me. So that is it. It didn't happen and we didn't force it. So the next one is which is the last one, GBP card. GBP card is a nice trade that we caught on Monday. It did descent. Like I said again, I will explain it again, but then like I said, from the swing, it did descent 2R, 2%, and then came back to smash out SL. So let me say it again. Anytime I drop a trade entry for you on the swing, your job as a day trader is to go lower and refine it. Go lower and refine it. Go lower and refine it. For example, if you refine this thing, this trade now, you refined it to this point. You've made 3R, 3.5 hours, 3.5 hours. Because this point, remember, you see? So this week is not necessary. This week is not necessary. And if you know your candlestick pattern, I keep saying this thing, this guy is a fucking good morning star candle. Like, you don't see this thing often in your POI. You don't. Like, you don't see this thing, this candlestick pattern. You don't see it often in a POI. You don't. If you know Chooks, only one Chooks, if he sees this pattern, he stacks waiting no good. If he sees this pattern in his entry, he stacks like mad, especially in 5 minutes time frame. That's where it comes from. So this pattern here, I've given you that this guy is going up at least to the first structural external liquidity. At least to the first, and this is it. At least to the first. So I did not say you should go and stack. I know what I said, so don't misquote me, I beg. So once you've seen this kind of candlestick pattern, you don't even need anybody to tell you again. And if I even see the entry, normally this entry itself doesn't even work most of the time, because from here, the entry should be from here, and then boom. But for this one to catch, I just this is on Monday when price was somewhere here. Look at it, price never even tap here that time when I do it. So it is very hard. So once you've seen it, your SL is already here. So you don't even need to go more. And your 3R is already cleared. Your 3R is already cleared. So you don't have to do too much. But as a swing trader, again, you want to start swinging and all that. That's why I covered everything, so that anything will not happen. And from 2R as a swing trader, from 2%, you should already break even and take some profits off the table. That is why I love day trading. I cannot see 2% and then come back to hit my loss after from Monday to Friday, I still end up losing. So I don't sit well with it again. Especially when I'm not risking tens of thousands of dollars yet. Sorry. So that's why, and that's how you should trade. So when I call trades from the 4-hour time frame and I covered every possible lows and all, your job is not to just pick it like that and take it. Your job is to refine it as a day trader, so you maximize the profit and reduce the losses. So I believe that makes sense. So basically, that's all for today on the analysis. So the next thing I do normally after every week is to show you how it went on the trading trade entry. So you see that everything I'm posting here is not just memes. Like it's something that happened. If I'm telling you that we made 10% this week, we made 10%. Tell you make 1% this week, we made 1%. I tell you made 100% this week, believe me, we made 100%. So I'm not doing it just for doing sake, but just to tell you that with consistency, you can pull any result. With consistency, you can pull any result. I don't know what's happening now. Whoa, I don't know again. Now. So that's it. If you have any question, drop it on the chat box before I start showing you guys what happened this week on the entry group. If you have any question, drop it on the chat box. So this is how it is. So I'll start leaving all these things. For now, I'll start leaving everything. So I'll know what happened in the week, the month, and then throughout the year. I'll leave it like that. So if you don't journal, that's how I journal mine. So the next thing is now going over to the entry group, how it was for the week. Yes, I've already posted the journal already for you guys, but showing you how it is, how it goes there, further much reiterates what we do in the inner what? You guys are not seeing my screen. What happens on the channel. So whether you earn profitable or not, that is now up to you. But everything I'm telling you, it happens. So let's head over to the Telegram. Let me show you guys how the week went. It was a crazy one though, but like I said, the problem is not the market. The problem is you. It's not the market. The problem is you. If you attack it as it's owing you something, it will pay you. But if you attack it like a businessman, you make money. So your job is, are you attacking it as I believe you can hear me. So, as I was saying, I wanted to show you guys the Telegram, and then network went off. But we are back. So I'm trying to share now. Oh, everybody's in Lagos now for the Forest Millionaire Expo. So, if you're in Lagos, pull up. So I'm showing you now. Yeah, it's not showing yet though. It is not showing yet. Why is it not? Okay, it went off again. Whoa, I'm gonna know my show now. We have less than 15 minutes, so let me do this thing fast. Okay, so this week started from February 2nd. What the hell? Okay, bastard don't show. So the week started on February 2nd, and that is how is this is how it went for the week. Oh my god. Yeah. So from this is the FS session. Everything was called. Why is it not showing on the screen yet? I'm already showing it now. It's showing. It's showing already. So first off, the okay. Yeah, can see it now. First off, the forex words, like I use different trading views for the YouTube and they're different for the entry group. So to differentiate everything. The first pair was GBP USD. GBP USD. Remember I told you guys to on the channel here, I told you guys to look for a buy and then go for it. But here, when that buy failed, I didn't see any break of structure and it came down to take out the low. I went in for a sell. So the sell was short-lived because I didn't cover entire highs. I didn't cover the entire highs. So we took a loss on Monday. So do you know what it means waking up to a loss on a Monday morning? On a Monday morning. So it's crazy. So that was how Monday, starting from the top. Yeah. Yes, I've seen it. So this is it. This was last week. This was last week. So started from GBP sell, which apparently was going well. Started well, and then around 8:52, I've already sent the entry. But something happened that when I don't really understand. It was so fast. It was fast and sweet. So Trade was going well, and drawdown, and around 10, around 4 p.m. I figured that trade took us out and went down to almost 2 hours. So that's how I closed the Monday with, not even closing the Monday. Yeah, that night with a loss around 4:22 p.m. And it was taken on the prop account that I was showing these people. I'm showing these people for 15K account actually. So, and the loss was here, and see the guy almost TP himself after taking us out. Just look at the peep. Look at that peep. Like small thing took us out, and that was how the Monday ended. So on Tuesday at about 12 12:45 a.m. I wasn't sleeping, so I'm just playing around with JPY pairs. And if you know very well, you know that JPY pairs move very well at Asian sessions. So I wasn't sleeping at the time, so I just feel like let me play around with JPY pairs. So I saw the Japan 225, posted it, saw the card JPY, posted it. I saw another AUD JPY, but I couldn't post it because it's already running. But then I had it and I dropped them. I went to bed. I woke up to this guy taking my stops because my stop loss here, as you can see, is 113658. Apparently, I made a mistake and my stop loss here is 113630. 630. So it was a bit lower, a bit higher. I don't know, Sha, but the guy just take me out. So I woke up, I saw it, and I entered again because I believe the trade actually. I entered again. I'm already in deep drawdown already, but I entered again. And that was where it started going from. Where it started going from. From there, everything was fine. And I miss this guy I took here. This is AUDJPY. I placed it. I didn't even send it out. I placed it. So he took, just left us like that and went. So on this guy, before morning, around 10, the guy already hit TP. So he didn't take me. So that was how I lost potentially one of my best trades for the week. But no problem, we still did. So this guy was going well around 11 to already 1 hour, close to 2 hours. As I was journaling, everything is going well. The same Tuesday though. So I saw this gold, I saw the silver, and then this JPY, this GBP JPY. All of them were missed. All these trades were missed. All of them were missed. And finally, I saw this too at the New York Open, J40. I dropped it and started tanking immediately. 1 hour done, close to 3 hours, and everything was good. So Tuesday was one of my best week. This one around Tuesday in the night, this guy already hit 3.3 hour. That's when I called them to BE and take partial if they wanted to. But this is my overall target for the trade. This up here. So with that, we were going nicely. 3 hour on Tuesday we closed with 5 hour running, 1 hour and 5 hour that is complete with this one still running. So on Wednesday, target was hit, 5 hour cleared on card JPY, and also this guy came back to SL to entry. So we are still good at it. This one was missed, this one was missed, and this one was missed. So I did pretty missed trade this week. Gold, silver, GBP, JPY, USD, JPY, all of them were missed. All of them, look at them all. And then I find the entry for Gem 40 and then dropped it. And then another entry on card, which we lost. That was a crazy loss. But then I know it was risky, but I told them to reduce their risk to 50%. So if you're risking 1% before, you're now risking 0.5. If you're risking 5% before, you're now risking 0.25. Like, I call everything bit by bit. So at the end of the day, if you didn't follow the instructions, then that would be on you. And like I said, we took the loss and minus 0.5, because I've already said that you should risk only half of your normal risk. So after that, I took another buy immediately, like a scalp. A scalp, I called it already, a scalp. One quick scalp on silver. And that scalp was what recovered the loss we took on this JPY, on this car JPY that was not planned. So the trade we took on silver covered for that, because from the entry point, done. So chill out. We are already done. So that's how the entry group was. It's crazy, but I'm already off. I'll show you everything. Okay, you can see it now. So that's how from this point everybody should close their gold, because I don't understand. And it's already 1 p.m. I don't like trading, being on trades when a new section is about opening, because it creates spikes and slippages, if you know what I mean. So I closed the gold, and then the JPY, car JPY was going well. Like it was going well. That's the second entry we entered. But then I don't know what happened. From that high, refused to break. Good night. Woke up in the morning, boom, SL hit. So I think that was on Thursday. I'm like, I'm done for the week. I'm done for the week. I dropped the journal for the week. On Monday, we took SL on GU, CAD JPY 5R, second entry SL. The silver took out, recovered the loss we took on this guy. And then Gem 40, 5R, and then gold SL, the other one SL. So I'm like, I don't think we should be holding any other trade for the week. Let's just end it here. So literally, I didn't journal missed trades because it's missed. I mean, why do you journal missed trades? You missed it. Your job is just to, if everything you did was correct, you just have to journal why you missed them and check why you missed them just to know it. It shouldn't be in your journal. Your journal should be your stop loss, your SL, or your TPs because that's the what really matters. The only thing you want to avoid is the reason why you take some losses, and then you check on the reason why you won some. So you have to maximize your wins over your losses. That is what journal helps you to do. So as you can see, 7 trades in total, and 4 losses. So the losses are always bigger, right? But what keeps you up at the end of the day is you lose one to make 5, you lose one to make 3, you lose one to make 2, you lose one. Your loss is always one. So it's always one. So how many losses? 1, 2, 3, 4. 1, 2, 3, 4. It's even 4. Okay. 4 losses. And then wins is 1, 2, 3. Just 3. At the end of the day, we still made 8.5%. So your job is you have to risk 1 to make more than 2. So you don't have to risk 1 or risk 10 to make 2. You don't have to risk 3 to make 2. You don't have to risk your whole account to make 3. It doesn't make sense. So that is how the week ended. And if you check on the journal, you see how it is because it is not random. It is not, I keep saying this is not random. So this is the first week of February. We ended with 8%. If you watch January, this is the first week of January. Here, we made 31%. And it looks like everything is just getting well. Second week, we made only 1%. 1. And then third week, we made 12%. And then last week, we made 13%, making it to be 50 something percent for the month of January. So February now, we're starting with 8% for the first week. I don't know what second week will bring. I don't know what third week or fourth week will bring. But I'm realistic that my general risk for myself is making 3% every month, 5% every month. But you can see that my journal is making 56% for the first month. And then first week of February, now we're already up 8%. So the job is simple. Trade like a business person. You're not trying to be correct every fucking time. Sorry for the F word. You're just trying to be correct most of the time. Some of the times. Because your risk is always more than less and very, very negligible than your wins. Very, very small wins. But your losses, if your losses are outweighs your wins, it means you're going to die off very, very soon. So make sure that your wins are calculated and more than your losses. So even if you take 10 losses and get 3 wins, good. As you can see, this trading thing is not for the faint-hearted. So you can see the guy. You see? So imagine now you're holding for this last place. You're holding for this last place. It means all your money, all your millions don't go like that. All your millions don't go like that. So 5.9%, but we left at 5. Know when to leave. If you remember last week, I said it. Your take profit should be at your body of the next low or the next high. The body, look at it, this body. So that is it. Know how to take your profit. Imagine I didn't do this. We should be now we've lost 5%. So 8 minus 5, so we should be up 3% this week. But then thank God I said it. And I showed you when I said it. Close. I said it. Close. And these are the reasons. So random trade I took for the week. Yeah, this guy is messed up a little bit. The gold was obviously missed. This is the one that we lost. GBP was obviously missed. I missed it, but this one I didn't take it. So just for journal's sake. GU was clearly lost. The loss was here. I didn't take the sell again from here because I didn't feel the need to. The silver was also missed. This guy here was missed. The USDJPY was also missed. Yeah, it was missed. The US oil, I didn't trade this one this week. I didn't trade this one this week. And then back to Japan pairs. I didn't trade them this week at all. Look at it. I didn't trade them this week. And then Japan. This was what the hell. So he came back. Will I say thank God I deleted or feel bad? But then if I didn't delete the limits after taking this one out, it means this should be a loss. Look at it. It will be a very painful loss. Jesus. Very painful loss. But then there's no need. There's no need. There's no how I would have entered this trade either. There's no how I would have entered this trade from here. It's unrealistic. So it should be from here. And from here it should be a missed trade. So I don't cry over spilled milk. So we've missed it, and then price came back and did this thing. Guy, where is he headed to? One more. Okay, I don't know. We'll find out next week. And then CAD-JPY, this guy gave me money. I was just trying to imagine. That's why I keep saying this. Once price is already going to the last high, like to the last lap, just be careful at the way you enter. Just careful where you enter. Because it like it would have been better. I had this position from here to here. Like it would be more better. I had it from here to here, and then take partials from somewhere here, from 7R or 5R. Take partial and then hold the last one, than looking for entry from this same point. That's why I took two losses here, one here, one here. So I don't know, man, but it's all good. This is the last. This is the last external range liquidity where price is headed to. So the last Gem 40 did well, but now trying to pause speed, but then we left very early. We left at the right place. So that's what I mean to say. And then this guy was missed, and I hated it for it. So thank God I didn't take anyone here, because taking a buy here would have taken a loss again. So that's basically how my trade went for the week, from you guys' eyes and then from the eyes of my entry group. So see you same time, not same time. See you on Monday by 8 p.m. 8 a.m. rather. If you have any question, you have 3 minutes to drop it. So call it a night. I'm already past my hour by 5. So let me just do it to 10 and then we'll call it a night. I cannot do anything again extra teaching this night because we already spent 1 hour already. So maybe on Monday I can do that. So if you have any question, kindly drop in the chat, and then remember to like and share the video for others to join next time. So 2 minutes to go for the question, and without any of those, just call it a night. Thank you for joining, and see you. 1 minute to go. All right then, no question. Let's call it a night. Enjoy yourself and have a lovely weekend. Thank you.